market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, the latest Fed minutes show officials were surprisingly wary of cutting interest rates when they met last month. Several officials suggest hikes may be needed if high inflation persists, putting the Fed at odds with President Trump, who has repeatedly called for lower rates. Well, joining us to discuss the rate outlook, the AI boom, and what it all means for commodities, Jim Reid, head of global macro and thematic research at Deutsche Bank, and Hambro, global head of thematic and sector investing at BlackRock. So thank you both for joining us. Look, it's all about the Fed until it's not, because it's AI that, will disrupt everything. Jim, what do you think is driving the markets right now?
Well, I think the biggest story is the AI disruption story at the moment. Look, I'll be honest with you. I've spent 30 years plus in this business looking at productivity go down all the time. So I'm genuinely excited by AI because I think it will increase productivity. I do think the last 2 or 3 weeks markets have gone a little bit crazy in assuming that everything will be disrupted by AI. I think it will take a little bit longer, and I suspect a lot of the companies that are being massively hit today are actually going to use AI to benefit their business. So I think it's an interesting kind of period. The market won't know a lot about the AI story for another year or two at least, and markets are moving quicker than that, and I don't think they've got the ability to stay that disrupted, if that makes sense.
But Jim, do they also have a good read on inflation? Because actually half the people I interview on this program says, look, the Fed will cut, and the other half will say absolutely not, because inflation is coming up quite significantly.
Well, I think there is a narrative that AI will be deflationary, and therefore that gives you scope to cut rates. And I think it's an eminently sensible argument. I would just say that in the last 250, 300 years, humans have been phenomenally innovative. They've invented, it's just been the most brilliant period for innovation. Inflation has soared, or has flown in that period because of policy. So inflation is a policy-led vehicle. It's not an innovation-led vehicle.
What's your take on commodities right now? Again, when you see there's dollar dynamics, there's inflation, which would be supportive of commodities, except when you look at valuations, it's really AI that takes it all.
Yeah, it's amazing what's going on in this regard. And what I've noticed in the last probably 18 months, and it's kind of just starting in that kind of time period, and started to accelerate in the second half of last year, is investors within the context of AI have been very focused on the kind of the new thing. And there's just a huge kind of one bet in the market. And this kind of race to spend more and more and more has kind of dazzled people. And I think what we're now seeing is a bit of a reality check, saying, like, where's this money going? Who are going to be the beneficiaries? And I think clearly there are some obvious ones. But I think when we're starting to think about the potential for disruption and the kind of against the kind of concentration of bets and concentration of wealth and returns, people are starting to think about the second-order beneficiaries. And when you think about the dollars that are being spent, what are they actually being spent on? Sure, a lot of it's semiconductor chips and so on, but a large part of it is actually physical, tangible stuff, and that's made out of materials. And so the kind of financially irrelevant resources sector, because it's become so small relative to the kind of huge tech behemoths in the market, is starting to see a flow of capital as people rotate out of some of the bets they've had for a very long time. But also the money that's being spent is turning into demand for commodities. That's turning into price change, which is elevating earnings. And, we've seen some fantastic numbers from companies, in the last few days. We're likely to see more of that in the future.
What benefits? Copper, yes, check, because that's, renewables, everything that we need for this new AI, even data centers. Yeah. Silver, unclear what it is for me for now, whether it tracks gold as a new asset class or whether it's actually because we use it for the chips in our phones. So what are you most bullish on?
So I would say all of the above, which is a pretty easy answer, but there'll be different outcomes. But the demand impact is very significant. You will remember the kind of China-led boom of the early 2000s. We had one demand engine come into a market that had underinvested in capital for well over a decade. We've seen the same trend. Peak investment into resources supply in 2011, the decline to 2015. Underinvestment since 2015, and now we've got this massive new source of demand that is elevating interest in the sector. Supply is unable to respond in the short term, and we're seeing this price appreciation. So we're going to see margin growth across a lot of companies, and that's going to translate into earnings. And what I've been really excited about in this results is just the growth in dividends. Companies are being very disciplined in the way they allocate capital.
I've always been a gold bug because I believe that fiat money is inherently inflationary. So, but I do think there's a bit of speculation in the gold price now as it is. But if you look at silver, we've got a long-term chart that shows you that in 1790, the year 1790, the price of silver in real terms was $80. This morning, I think it's in the mid to high 70s. Yep. So it's actually gone nowhere in 235 years. So you have to remember that commodities like silver, that's not necessarily a store of value, are a factor in production rather than an asset you just hold and gain real returns on.
But Jim, when you look, for example, at what we're seeing in gold, how much of that is actually a play against U.S. assets? Because we've had a lot of pushback in saying, well, this is not an anti-Trump policy play, but at the same time, you see central banks buying it maybe more than treasuries in the future.
Yeah, I think it goes back a bit further. I think with the geopolitical world as it is today, maybe this took a spike up after the start of the Russia invasion of Ukraine. I think reserve managers around the world probably felt that it was best to diversify out of a very, very heavy dollar holding and hold other assets, just in case the world changed that those dollar assets might not be available. So I think a lot of the demand for gold in the last 3 or 4 years has come from central reserve managers buying gold. So there is a genuine demand story as well. I think there is an element of speculation there, and there's an element of kind of store of value against inflation and combined. Yeah,
I mean, I don't disagree with that. Good to meet another gold bug. But I think there's an element of speculation in everything. So I don't think that's any different. To me, what's happened is we've seen this concentration of exposure to dollars in central banks, in investor portfolios and so on. And we're now starting to see people think about that and say, do we really need to have as much as we've got? And then but
going into what? Because there's no real alternative, maybe apart from certain gold assets.
And that's exactly the point. So if you're going to be coming out of U.S. Treasury bills, where are you going to go? Are you going to go into euros? Maybe, maybe not. So where are you going to go? And obviously the flow we've seen, both from a retail investor, but also from central banks and other sources, is into physical bullion. And we've seen this fantastic move. It's basically been a rebasing of gold prices relative to the loss of purchasing power. So the price of gold will will be an outcome of how much you lose in purchasing power. And that's what we're seeing right now.
Jim, why is the market not paying enough attention to geopolitics? They don't know how to price it, or is it impossible to know where it ends?
Look, we've done extensive work looking at what geopolitics does to markets, especially focusing on the US markets. It's the biggest, most liquid, and tend to find that in the last 70, 80 years, geopolitical shocks tend to have a short half-life in terms of their impact on the market. And, within a month and a half, markets are usually back where they were before the shock or higher. So I think it's fascinating at the moment because there's no doubt geopolitics are more important than at any point in the last 3 or 4 decades. But the history has been that you should probably fade geopolitical news flow. But it's getting so intense that there probably will be a geopolitical event that kind of defies that at some point. So that's the risk markets are taking, that you should probably fade it, but we are building to a level where one won't be faded.
Is it fair to say that there's also just a lot more risk out there? So actually the different outcomes, the kind of Venn diagram of different outcomes is much larger than in the past. So does that lead to more policy mistakes potentially, or even chief executives making the wrong decision?
Yeah, look, I mean, it's difficult if you're a CEO to plan 5 years out because, do you plan for a bipolar world? Do you plan for a multipolar world? Or do you kind of plan for the world that we've kind of grown up in? And that's, I think, the most difficult thing for a business now in planning. And as much as countries are trying to encourage investment, that will hold some CEOs back, that they don't kind of know what the geopolitical landscape will be in 5 years.
And that also has an impact on commodities because maybe more consolidation.
Yeah, well, we've seen a hell of a lot of news around consolidation of late. Obviously, we had the Rio Tinto Glencore talks, and there's lots of headlines around that again today. So maybe that's not going away. I think there isn't a strong argument for these companies to consolidate. The projects they're going to have to build to be able to meet the demand growth for many of these commodities are enormous. Huge amounts of capital that they're going to have to spend. And, we know that the history of spending by these companies hasn't always been great. So if you can do that in a more disciplined way with a stronger balance sheet, there's probably a greater chance of success. So I think consolidation, which would also increase market cap relevance, is again an important point. I think on the geopolitics side, there's so many different elements of that. I would agree with you on the fading thing, but one of the things that's dominated the headlines has been this geopolitical focus around critical mineral supply, and so the debates around rare earths and so on. I find it extraordinary that politicians at a very, very senior level are so focused on getting access to commodities because they realize how important they're going to be in the digital world of the future.
Should have started 20 years ago.
Exactly, but the financial markets are only just waking up to this. So that gives me confidence that we're only really in the first innings of what could be a very exciting commodities cycle.
Going back to AI, are you seeing an automatic increase to GDP with the labor market that holds? And again, is this a problem for the next 12 months, or do we push it down like 3-4 years?
It's difficult because you've not got a huge amount of evidence at the moment. Obviously, if you take the US numbers at face value, job accumulation actually was downgraded in recent times. And growth was reasonably firm. So at face value, you'd have to say that productivity has gone up a bit. It would be difficult to argue how much of that is due to AI or not. So I think it's too early to say. My personal view is it will benefit productivity, but I'm just not quite sure of the timing of that. And I think it might be a little bit more delayed than kind of people are currently thinking.
What are you expecting for equities overall this year? Is there going to be a lot more volatility with AI and the commodities geopolitics interplaying?
I suppose my issue is that the winners and losers from AI, we have gotten very little visibility at the moment. And I think as recently ago as 3 months ago, the market was assuming that everything to do with tech was an automatic winner from AI. And I think a lot of the movement in the last 3 or 4 months has actually been healthy in the sense that there will be losers and there will be winners. And we are pricing a bit more of a realistic environment. And I think that probably continues. I think by the end of the year, we still won't know who the real winners and losers are going to be. And therefore, there's probably plenty of scope for the market to swing in both directions because they want to trade a narrative.
Okay, thank you both for joining us. Jim Reid, head of global macro and thematic research at Deutsche Bank, and Evie Hambro, global head of thematic and sector investing at BlackRock. Coming up, the IAEA gets involved in the U.S.-Iran nuclear talks. We'll speak to the Director General Rafael Grossi. He's coming up next, and this is Bloomberg.
Earnings season is here.
Let's get back to the earnings story.
Get all the details that you're going to need to start the trade.
Bloomberg is first to break the numbers.
A bunch of earnings. Crédit Agricole.
Earnings from Heineken, ABN AMRO reporting as well.
Fantastic reporting from you and the team.
With the smartest insights.
We delivered again record results.
If we take a step back and look at the yearly results, the income is stable.
Our earnings interviews continue. Lots of really contrasting conversations.
Continuing coverage on Bloomberg.
The conversations that matter, the insights you need. This is The Pulse. I'm Francine Lacqua here in London. Now, oil steadied after its biggest daily gain since October following a report that American military intervention in Iran could come sooner than expected. There has been some progress in talks between the two sides, and it's been revealed Iran's foreign minister met the head of the UN's atomic watchdog, Rafael Grossi, earlier this week. Now, we can speak with Rafael Grossi, Director General of the International Atomic Energy Agency. Now, Mr. Grossi, as always, it's a great pleasure to speak to you. Now, you met with the Iranian foreign minister on Monday. Concretely, what came out of those talks?
Well, we met with him. First of all, good to see you again, Francine. First of all, I met with him on Monday, and then on Tuesday with him and also with the American delegation there. So it's been a couple of days at least, of very intensive consultations there. I believe that important ones, because my sense is that in this conversation we are moving beyond generalities. And when I say this, what I want to say is that we are looking at the exact things that we need to be inspecting, looking at in Iran, the activities that should not be pursued in the future, some activities that could continue. I mean, all in all, what could be the essence of a viable agreement that would bring some certainty and stability to the region and to the country.
But, Mr. Grossi, your inspectors haven't visited, actually, some of the bombed Iranian nuclear sites in 8 months. Did the foreign minister give you indication that you'd be welcome? What needs to happen before you can go?
Well, I think it's part of that, precisely. And you are very right in saying that we have returned to Iran. We have been conducting some inspections, but not to the facilities that were attacked. And which are crucial, because those host most of the material, the highly enriched uranium that Iran still has, and which has been causing some degree of concern in the international community because of its proliferation potential. So we have to go back to that. But I believe that as the conversation goes, this would be part, if you want, a requisite for the deal to gel and to be there. There cannot be a deal if the IAEA is not able to verify. And I am encouraged by what I heard from the foreign minister of Iran telling me that they would be ready to provide the full transparency and the full verification that we need. Of course, we are not there yet.
But Mr. So how quickly do you think you can go back, your inspectors can go back to Iran? And specifically, is this a deterrence? Actually, can you de-escalate the situation simply by having inspectors there?
Well, of course, because first of all, we could go back now. If we had the opportunity, our inspectors are ready, we know what to do, we know where to do it. But we are conscious of the fact that there is this political negotiation, which is, over this technical question that you're putting to me. So this opening, I think, hinges on the possibility of a wider type of agreement. And of course, it will be more than a deterrent. It will be something that will allow us to have all the credible assurances that this material is still there. There hasn't been any deviation, and we will have to decide. They will have to decide, of course, and we will have to verify what is to be done with this material.
Yeah. I mean, Mr. Grossi, again, it's quite complicated because, it's very difficult to see compromise if one side says that Iran has no right to enrich uranium, but actually on the other side, if you sign the treaty, then you can use, enriched uranium for other means. So are you coming up with an innovative solution? How do the two sides meet in the middle?
We are trying exactly that. This is the essence of diplomacy, Francine. So we understand that for Iran, the issue of their nuclear activities and technological activities is very important. And we also understand that the United States has been very, very clear. President Trump has expressed in his own words the certain red lines. Ambassador Witkoff and Dr. Kushner, we have been talking to them, and we know what are the areas that they think that should not be part of the equation if we are to have an agreement. Let's put it like that. So we are all in an understanding of this. So the IAEA and myself, I'm trying to work together with, and also with the foreign minister of Oman, who is trying to help us as a mediator. We are trying to define a line that would contemplate these two intentions. It's not impossible. There are certain things that I think Iran understands that cannot be pursued. They are entitled to do some activities in the peaceful realm, of course, and then we have to provide with the watertight verification that there is no deviation from that. All of that is like a jigsaw puzzle on the table. We know and we recognize all the pieces. We have to put them together.
Mr. Grossi, I know you also need to write a report ahead of your big meeting early next month. Do you think you'll have access to the damaged sites in Iran before then?
I hope so, but if not, I think having an agreement in place or being very close to an agreement in place will go a long way into me being able to tell the international community, well, we are in a much better position now. We have these commitments, and we are going to be moving fast. So I'm not saying that things are easy. Far from that. There are still differences in what one and the other want, but the fact that we are present there, for example, as opposed to past conversations, is a clear indicator that now we are looking at the real business that needs to happen for us to have an agreement.
I mean, it looks possible, and we've been talking about some kind of big strike from the U.S. Now there's rumors that it could happen as soon as this weekend. Have you had a conversation with the U.S. about what it could look like, and what do you think will happen?
Well, of course, the IAEA cannot be part as an international organization or of any military plans. Or, my job is more related to peace and international security. So what I'm trying to do, my effort is to provide for the conditions that would take them where they want to be without the use of force.
What did the foreign minister tell you in regards to that? What does he expect to happen in the next couple of weeks?
I think that we have to, and there's not much time, and I think you are right in pointing out to the time frame here. We have to come up with a number of concrete provisions we discussed, and it was 6 hours of talks in different formats. On Tuesday, in particular, in Geneva. So now we have to formulate them. There are a couple of solutions that the IAEA has proposed, and they both need to look at them and see whether this would work. There is not much time, but we are working on something concrete.
Mr. Grossi, we only have 1 minute left, but has your team finished reviewing Ukraine's transmission network? What can you tell us?
We are at the moment, Francine, we are negotiating yet another ceasefire between Russia and Ukraine to be able to repair one line that went down a few days ago. Fortunately, we have another line which is still up, but we cannot be relying on only one. So I think we will have a ceasefire. We negotiated already 4 successfully, so I'm hopeful that both armed forces will recognize the need to have a period of silence so the lines can be repaired. As you can see, it's extremely fragile. It continues to be, but we are on top of it.
Thank you so much, Mr. Grossi, as ever, for giving us a little bit of your busy schedule. Rafael Grossi, Director General of the International Atomic Energy Agency. Coming up, we'll be going to India to talk about the AI summit. This is Bloomberg. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. Fed officials appeared surprisingly wary of cutting rates when they met last month, with some even suggesting the central bank may need to raise rates if inflation remains too high. Despite Washington and Tehran sounding cautiously upbeat on nuclear talks in Geneva, European gas prices spike following a report that U.S. military intervention in Iran could come sooner than expected. And Bloomberg understands that OpenAI is close to a record-breaking financing deal that could value the company at more than $850 billion. So the Indian Prime Minister Narendra Modi is hosting global leaders for an artificial intelligence summit in New Delhi. It is the first ever global AI summit to be hosted in the global south. Our Haslinda Amin is there with a special guest. Hi, Has.
Hey there, Francine. Delhi is abuzz with AI optimism. Everywhere you go, you see pictures of Prime Minister Narendra Modi. He's become the poster child for Indian AI. And one photo actually had For India, AI is all-inclusive, and that is the bold idea. India wants AI to be accessible to all 1 billion people. Let's talk about India's ambitions. Of course, with me is the CEO of Accenture, Julie Sweet. Julie, good to have you with us.
Thanks for having me.
What's the big takeaway in all the conversations you've been having here? Because we're seeing a lot of commitments in terms of investment, in terms of money, hundreds of billions of dollars. And prior to this, there's been a lack of investment in AI. It's changing. Is it enough to convince you it is different this time around for India?
Absolutely. India is really taking the lead when you think about their approach. Very pragmatic regulation. From the beginning, they're thinking about building it out as an infrastructure. They start with everyone having a digital identity, and then think about what they're doing for education. In primary education, AI and computational thinking is already embedded. So really positive about the steps that India is taking to make sure that, in fact, there's prosperity for all from an AI-enabled future.
How quickly can that turn take? Because right now, it's ranked third, but it is a distant third in terms of AI competitiveness, behind the likes of only the US and China. How quickly can India make that pivot, you think?
Well, I think pretty quickly, in the sense that a lot of it is around both talent and investment. And one of the things you've seen this week is a lot of investments in India being announced. And so I think it's more around having a clear strategy and then the ability to get the investment, which we've seen is happening.
And in terms of competitive advantage, how do you think India can build that versus Silicon Valley, Europe, the US?
If you think about the global south in particular, India starts with a huge advantage, which is the incredible talent that's here. And so, one of the things that's been a theme this week is about India taking a position of leadership in the global south and being a real role model. When I think about Accenture, we have over 350,000 people here, and it's because of the great talent. Their talent here is tightly integrated with our talent around the world, but India really is a destination for companies because of the talent.
And how differently do you look at talent? You talk about how you have a great presence in India. In fact, India is the biggest market for you in terms of employees outside of the US. As you think about progress, developments made by AI, how are you viewing, how is that shaping how you look at talent in a market like India?
Well, we actually have a global talent strategy, and whether you're in India or in the US, we're doing, for example, company-wide agentic AI training. And so what we really think about is where is the capacity, because there are constraints in many of the countries we operate where there are just not enough graduates, and that's one of the reasons so many people have come to India. But we think about our global talent strategy, and we started actually back in 2019 saying that every person at Accenture had to know what was then classical AI, data, cloud, new ways of working, because this isn't about technology. It really is about reinventing how you operate your companies, the way you look at learning. It's a reinvention.
And I know that Accenture, you, under your leadership, you have invested billions of dollars in Gen AI. I'm just wondering, in terms of meaningful returns from that investment, when do you think that might happen, and what might that look like?
We're already seeing those returns. Last year we grew 7%. We're a $70 billion company. And the way we, though, really look at our success is what we're doing for clients. And so we're helping pharma companies cut down their time from drug discovery to market, right? We're helping consumer goods companies access the new mall, which is the LLM, right? Helping them take advantage of the new kinds of customer engagement. All of this, of course, means that when we create value for clients, we create value for Accenture.
What are the most common things that your clients are asking you to do in helping them run a better business?
The biggest questions I get today is how do we scale AI? Because there have been so many examples where you get a really successful proof of concept, but then companies are finding that they can't scale on themselves. And there's a couple of things that are really important. And the first is that it's not about the AI. right? We've learned that technology is just a tool. It's about the outcome that you drive AI. And I think that's why clients really value us, because when we're coming in, we're not selling them an AI project. We're selling them an outcome, more customer engagement, better NPS. We're selling them, higher revenue because they've got a new way of doing upsell. And so that's where clients are really coming to us, is to understand how to turn AI into a business outcome.
We know that AI brings a lot of disruption, and that impacts hiring, jobs. That is still a big conversation here at this particular summit. When you take a look at how companies are employing AI, do you see perhaps a trend of companies hiring fewer people, or perhaps even increase because of productivity?
If there's one thing you take away from our discussion today, is using AI to be an engine for growth is how you get to global prosperity, right? When you use AI to drive growth and not just productivity, that's how you end up, like Accenture, hiring more people. So we'll hire more people this year than we did last year because we're growing. We just did a survey, a quarterly survey, and 78% of C-suites now say that the biggest value from AI is actually growth. CEOs know you cannot cut your way to growth.
Yet, investors are not really buying into that story. News from Anthropic actually led to a sell-off in software companies. I mean, Accenture was hit by that as well. I'm just wondering, how do you convince, investors, markets, that that's not the case, really?
There's a lot of things that go into the markets, and I think most companies like Accenture, we focus on what are we delivering every day, and we deliver value for our clients, and we know over the long term that when you actually deliver value and you deliver on your commitments to the street in terms of numbers, that's the best way to cut through all of the noise.
And in 5 years, how might Accenture look like because of AI?
Look, we are already changing today from what we sell and how we actually deliver it for our clients. And as you look ahead for 5 years, we're trying to be part of the AI infrastructure. So, for example, not only are we helping clients use AI, we're helping build data centers through our consulting, right? We're helping in cyber, because cyber is such a big part of it. So think of Accenture in 5 years as deeply embedded in every part of the AI infrastructure that's necessary for this incredible future that we've been talking about this week.
Julie, just one final question. Do you think governments and governance institutions are really ready for these super intelligent systems?
Well, this is a great week to demonstrate. There were so many leaders from governments across the world that I don't think anyone can say they're ready, but they're investing the time to be ready. And that's, I think, one of the reasons why I'm so optimistic coming out of this summit is that the themes are all the same. We need to make sure that we have access. We need to make sure that we drive growth, and that this wonderful and powerful technology is truly used for the good of all. And that result can only start with people's commitment to that outcome.
Julie, thank you so much for your time today. Accenture CEO Julie Sweet here, and Francine, of course, she knows you really well. She says hello. Back to you.
Yeah, we always have good conversations, as did you, on AI and how that will change the future also of some of these companies. Haslinda, thank you. Haslinda, I mean, they're speaking to the CEO of Accenture. Now, Microsoft co-founder Bill Gates has backed out of a keynote address at the Indian AI Summit just hours before he was due to speak. The withdrawal follows criticism of his relationship with convicted sex offender Jeffrey Epstein. The billionaire's philanthropic organization, the Gates Foundation, says the decision was taken to ensure the focus remains on the conference. And the French President Emmanuel Macron is rejecting how social media companies defend their free speech. It comes as Europe considers banning children from platforms like Instagram and Facebook. Now, the Trump administration has criticized the proposal, calling them a form of censorship. But speaking in India, Macron said the free speech argument does not stand up.
Having just no clue about how the algorithm is made, how it is tested, how it is trained, and where it will guide you. I mean, the democratic consequences of this bias could be huge. Some of them claim to be in favor of free speech. Okay, we're in favor of free algorithm. Totally transparent. Because, I mean, free speech is a pure bull. Nobody knows how you are guided through this so-called free speech, especially when it's to be guided from one hated speech to another hated speech.
And Bloomberg has learned that OpenAI is close to finalizing the first phase of a new funding round that's likely to bring in more than $100 billion. The record-breaking financing deal would give the startup additional capital to build out its artificial intelligence tools. OpenAI's Sam Altman told the AI Summit those tools are likely to come with ethical risks.
Most of the important discoveries happen when technology and society meet, sometimes have some friction, and co-evolve. For example, we don't yet know how to think about some superintelligence being aligned with dictators in totalitarian countries. We don't know how to think about countries using AI to fight new kinds of war with each other. We don't know how to think about when and whether countries are going to have to think about new forms of social contracts. But we think it's important to have more understanding and society-wide debate before we're all surprised. Of special note, and related to all 3 points, we continue to believe that iterative deployment is a key strategic insight, and that society needs to contend with and use each successive new level of AI capability, have time to integrate it, understand it, and decide how to move forward. This has been working surprisingly well so far.
And Demis Hassabis, the chief executive of Google DeepMind, says India has a huge potential in AI thanks to the talent building up in the country. He spoke to Haslinda alongside Alphabet's senior vice president at the AI Impact Summit in New Delhi.
I've worked on AI my whole career, my whole life, because I believe it could be the ultimate tool to accelerate scientific discovery and medicine, and also help with some of the other grand challenges facing society today, like climate change and energy. All of these things I think AI can help and be applied to. On the more individual scale, and maybe also for India specifically, I think that this incredible technology, powerful technology, is sort of available to almost everyone around the world, maybe only with a lag time of a couple of months behind the absolute frontier. So what I imagine if I was a young person today thinking about working in technology, maybe building a business, is I think there's incredible untapped potential here. And using these technologies, you can almost sort of become superpowered. You can kind of do 10x of what I think an individual engineer could have done in the past. And so I think there's incredible new business opportunities and new types of jobs that will be even more high earning and more valuable and more fulfilling than perhaps some of the jobs that will be disrupted by AI.
How do we position for that?
No, I would also just add a few more things. I think part of the potential for average benefit is enormous, but I think there's some work we all have to do. So, for example, if I think about questions of access, that's so important. How do we make sure everybody actually has access to the technology to be able to use it, capitalize it? Other questions of access, which are particularly important in countries like India, are access through different languages. For example, I mean, India has many, many different languages. And I think focusing, for example, on making sure that people can actually access the technology in their language, in their culture. And that's one of the reasons we're spending so much time on in the Indic languages. I mean, we have a project right now with Project Vani, where we're trying to work across something like over 700 districts and all the dialects that are used in those districts to see, can we build in more Indic languages? So if you think about that question of access and linguistic access, that's one of the ways you democratize the possibility of people being able to take advantage of this technology.
Demis Hassabis, the Google DeepMind chief executive, and James Manika, Alphabet senior vice president. Now, Airbus has blamed its engine supplier, Pratt & Whitney, for failing to deliver enough parts to meet its aircraft manufacturing targets. The supply shortage is forcing Airbus to slow down production and lower its delivery expectations through 2027. That's likely to leave Airbus with a bottleneck at a time that the arch-rival Boeing continues to ramp up output, while shares are down more than 5% in Paris. And don't miss the Airbus chief executive, Guillaume Faury, who's on Bloomberg Brief at 10:45 a.m. London time. Now, Air France-KLM has reported better than expected earnings in the fourth quarter. Speaking to Bloomberg, the company's chief executive says he's upbeat about the lucrative North Atlantic routes in spite of heightened geopolitical tensions.
We're quite pleased with how last year worked out. It's beat our expectations as well. With all the geopolitical challenges we've had, across many regions in our network, Western Africa, Middle East, and as you know, we still can't overfly Russia. But the transatlantic is a strong point for us, in particular the premium market, and in particular point of sale United States. And we've introduced a whole bunch of new products on the premium end, and they're being extremely well received in the market, and we're extremely well exposed to fully take advantage of that.
And you see that demand carrying on? That is not something that you see fading at this point?
Well, it's been pretty consistent for the last, I'd say, 3-4 years, and we have not seen, despite recent press on change in people's travel patterns. We have not witnessed that ourselves at France-KLM. Point of sale US and point of sale Europe as well, in particular premium, as I just mentioned, quite strong. We're not seeing anything in the near term that causes us any worry. The European airline industry, in particular our own, we're significantly higher hedged than our American competitors. In the U.S., most airlines are not hedged. We've got well over 50-60% of our annual fuel spend hedged. So I think we're in a very good position to weather any significant increase. Of course, it's never enjoyable going through so much unknown tension. But our exposure to that part of the world is relatively limited. Because of the heavy Gulf airline competition we have. So the exposure, if it is in the Gulf region or in the Indian subcontinent or going into Asia, I think we're better positioned in terms of exposure than some of our other competitors.
Well, the Air France-KLM chief executive there speaking to Bloomberg a bit earlier. Coming up, peace talks continue between the U.S. and Iran and in the Russia-Ukraine conflict. We'll discuss whether progress is being made with geopolitical strategist Tina Fordham. That's coming up next, and this is Bloomberg.
There's many reasons and arguments that one could make for a strike against Iran. The president has always been very clear, though, with respect to Iran or any country around the world, diplomacy is always his first option, and Iran would be very wise to make a deal with President Trump and with this administration.
Well, that's the latest from the White House press secretary, Caroline Leavitt, on Iran. Let's bring in Tina Fordham, founder and geopolitical strategist at Fordham Global Foresights. Tina, thank you, as always, for giving us a little bit of your time. I mean, we didn't know where to start because it's Iran, it's Ukraine, it's geopolitics, it could be Taiwan. We could go in a number of directions. What would you describe as the most pressing issue for U.S. foreign policy right now?
Well, U.S. foreign policy has been everything, everywhere, all at once, right, since the start of the year. And it's been really dramatic after the Venezuela operation, after the Greenland pressure, which brought about the rupture. Now, though, the most pressing issue is Iran. If you look at the U.S. military buildup in the Gulf, it is the strongest it's been since the Gulf War in 2003.
So in Iran, I mean, again, we've been waiting for some kind of activity or strike for the last 2 to 3 weeks. Yeah. Do you think the U.S. will go ahead with it?
Well, this is what the United States is looking like it's doing. It is concentrating military assets in a signal to show that it's serious. And I think that we should take the White House at face value when it says it's willing to use force. What I worry about is that these maneuvers will backfire, right? That the United States is actually pushing itself into a corner because you have to think about the incentives of your counterparty. And President Trump likes to use force in targeted ways, like the Venezuela operation, which was dramatic and successful and resulted in no loss of life for U.S. military. This would not be a similar situation in Iran. There are real risks of contagion, of it going wrong, and not being contained.
What does the U.S. want from Iran? I mean, is this about nuclear enrichment? Is this about oil? Is this about the protests?
This is also not clear, because when we first started having these conversations, President Trump signaled in January, when there were these mass protests in Iran, that help was on the way. Those protests have since been subdued or suppressed. Now it seems to be about the nuclear program. But remember, last June, the U.S. attacks, President Trump said that they had, obliterated the nuclear program. Now it's about nuclear enrichment. And this has always been a red line for the regime in Iran. These guys have strategic patience in a way that the White House may not.
I mean, the other thing that I thought was surprising was that they're bundling Ukraine and Russia together. Sorry, Ukraine and Iran, that you send, two people to negotiate two of the biggest geopolitical concerns that we have of our times. What does that signal?
I think, on the topic of patience, maybe willingness to try to kill two birds with one stone. But again, I think it's a failure to understand your opposite number. Dollar diplomacy can be compelling. In Ukraine, it might bring about a very different result, which is squeezing Ukraine out of the discussions, and a U.S.-Russia deal, which might result in sanctions being reversed without Russia actually making concessions that would prevent it from trying something similar again.
Tina, I had a good panel actually at Munich Security Conference, and on it was the U.S. ambassador to NATO. And he said something that I still think about that really struck me. He believes that with one phone call, China can stop Russia from continuing to attack Ukraine.
But why would it?
Do we need to get closer to China? Is there something that Europe can offer to get them on side?
I don't see why China would do that. Right now, if the United States is busy with Iran and caught up in trying to bring about a diplomatic resolution in Russia-Ukraine, why would China want to intervene to stop it? China is now very invested in supporting Russia with its friendship without limits, including military hardware. The NATO ambassador on your panel is probably right, but I have to ask myself, how is that in China's interests? I think that misunderstands the strategic calculus of the big players.
What's the calculus for Europe? It's being left behind. It's not even part of these negotiations. I mean, Europe is still the only one really supporting Ukraine concretely at this point.
And that's what the White House believes, is right and proper, that Ukraine is Europe's problem. You're starting to see talking points from European populist parties that resemble the Kremlin's reform yesterday, saying that this is a regional Slavic conflict. What I think is underappreciated, though, is that Europe has tremendous geopolitical power. I think it is a sleeping giant. And I think if we also look in the context of Mark Carney and his 10-country trade bloc, which could bring together so-called middle powers, we're talking about a huge, subset of the global economy, that could meaningfully push back on White House efforts. This isn't a tripartite world, as much as people would like to believe it or like that concept.
But what does Europe need to do now to be stronger? I mean, there's talk between France and also Germany about nuclear deterrence, and it's unclear whether even on that they're on the same page.
Spending on defense, nuclear deterrent, I really think that there is nothing like an external adversary to concentrate minds. I think that Europe is moving more quickly than is appreciated, and again, that we do have the economic heft and potentially the geopolitical power to concentrate. It isn't going to happen overnight.
Tina, thank you so much, as always, for joining us. Tina Fordham, founder and geopolitical strategist at Fordham Global Foresight. Now, there is quite a lot going on in the markets. This is, I would say, a sideshow to what's going on in geopolitics, but the markets probably don't think that because they're looking at AI, and they're also looking at the latest minutes from the Fed. This is because there is quite a lot of stocks that are now stalling. Brent pushing further above $70, but actually Treasuries extending some of their losses, and after some of the Fed policymakers signaled some concerns over inflation that remains stubbornly above the 2% target. So we'll have to see what happens to Fed expectations going forward for interest rate cuts. Up next, Bloomberg Brief, and this is Bloomberg.